Hey everyone, welcome back to another video. In this one, we're going to be solving an options question. Before we get started, go ahead and hit that subscribe button if you haven't already. Helps me a lot. So this question was submitted to me by one of my students, and I thought it would be a good one to take a look at together. So let's read through it. Assume an investor constructs a portfolio by buying 2 shares of ABC stock at a price of $35 per share, a put option with a strike of 40, and simultaneously selling a call option with a strike price of 40. The premiums on the put option are $1. The premium on the call option is 87 cents, and it's saying each option is based on one stock, not a bundle. What is the profit or loss on this portfolio if the market price is $37.72 at expiration? Okay, so we're going to do 2 things in this video. We're going to go over how to find the payoff, and then also the profit to actually answer the question. Let's start by breaking down what are all the positions that we have. So we've got 2 shares of the stock. So that's 2 long stocks. Make a little table here to keep track of it. So I've got 2 long stock positions, and they were purchased at $35 per share. Today the share is $37.72. Very simple. If you're looking for the payoff for a long position on a stock, it's just the market value, right? Because if you were to sell the stock today, you would get the market value of the stock, $37.72. So up here I'll put the stock price of $37.72, and the long stock payoff would just be $37.72 times 2, because I've got 2 of them. So that's $75.44. You see, I haven't included the original price I paid because I'm looking for payoff. So when you want to find payoff, you really just want to establish what are we receiving today. If we were to close this portfolio today, how much cash would we get? Well, if I sold these 2 stocks today at $37.72, I would get $75.44. Since we also have a put option that we purchased, so we have a long put. Now, the way we know that this is long is they said that we are buying the put option. When you buy an option, you are in the long position. If you sell or issue an option, you are in the short position. So here we are long the put option with a strike price of 40. Okay, so for put options to be in the money, the stock price has to be below the strike price. Here, the stock price is $37.72. The strike price is 40. We are in the money. So if you were to take the strike price minus the stock price, so in this case, 40 minus $37.72, we are $2.28 in the money. And since we are in the long position, we would have a positive payoff of $2.28. At the same time, it says that we sold a call option. So we are short because we sold a call option. So I'll write short call here. The strike is 40. Now, call options are in the money when the stock price is higher than the strike price. So since we are not in the money, there is no payoff in this case. So the payoff here would be 0. You can make a note. We are not in the money. Now you see, I haven't touched the premiums yet because if I'm looking for payoff, I'm simply looking at how much cash I would receive today. And so I don't want to include any amounts that I paid to set up this portfolio, right? To buy these instruments. So the payoff would just be the sum. So the payoff today would be $77.72. Now, if you want to calculate the profit, you want to consider the premiums, but also the price that we paid for these 2 shares of the stock that we purchased. So let's start with the purchase price of the stock. We paid $35 2 times. So we paid $70 to buy the shares. For the long put premium, since we bought the option, we would have to pay the premium. And so the premium of $1 is also a cost. However, the premium on the call option is a positive number because we sold the option, and so we are collecting the premium. So I'll write short call premium plus 87 cents. And that would wrap up everything, and we could put it together to get our profit. So the profit on this portfolio would be $7.59. So this is kind of a broken down but long way to solve this question. And if you understand every step along the way, then you have a pretty good grasp on how to solve options questions. If you have any questions, please leave a comment. And again, don't forget to hit that subscribe button, throw me a like, and I'll see you guys in the next video. Bye for now.